What is going on, investors? Hopefully guys are doing well out there. Time to pick up the story of Coinbase, ticker symbol COIN. Over the last year, the stock is down big, down 68%. That's not breaking any news. Although over the last month, this stock has been on fire, up 57%. So certainly from a technical perspective, there are some ways to make money here. But also on today's show, we will talk about this from the fundamental perspective. The buy and hold investor might be wondering if a stock is down over 68% over the last year, maybe it makes a good buy. We'll discuss both of those things on today's show. Now, the most recent quarter came in today, that Q2 quarter over at Coinbase coming in at $808 million. That was a decline on that revenue side, 63% year over year. It did miss expectations by about 70 million. I tell you what, when we come forward and look at Wall Street's estimates, I got to believe a company like this, very tough to judge that revenue over the next couple of quarters, considering how volatile cryptocurrency can be. But for the most part, Wall Street has this company generating between 800 and upwards of $1 billion in quarterly revenue for the foreseeable future. A lot of that obviously is more of a speculative guess than something that can be easily predicted. I think one way to think about the most recent quarter that Coinbase put up in Q2 is, could this be the worst that it actually gets for Coinbase? We certainly see that from a trading volume perspective. Notice that retail clients really fell off the board. Just $46 billion worth of trading volume. A year ago, they were over $145 billion. Institutional clients as well, just $171 billion worth of trading volume. They were at 235 just last quarter and 317 a year ago. It also translates when you look at the assets on the platform. Look at the retail client. Obviously, when crypto goes down as much as it did really year over year or even quarter over quarter, you're going to have a natural decline of that asset value. But this is also showing you that people are just pulling their assets off of Coinbase. It was 123 billion on retail assets last quarter. It's now 47 a year ago. It was at 88 on the institutional side. Again, seeing those same types of withdrawals from 49 down from 92 a year ago. Coinbase does explain that on the institutional side, it's a lot of de-risking, essentially getting out of crypto and just getting out of the market since it's too volatile. It's not them taking their crypto or their assets off of Coinbase and going to a competitor. And if and when the crypto market stabilizes, they expect this institutional client and probably the retail client to come back. But obviously, again, that is just a guess. It's more speculation, and it's very tough to make money when you're just speculating in the stock market. It's hard enough, especially when you're speculating. Now, revenue came in the most recent quarter at that $808 million. Last year, it was $2.2 billion, and we thought that was spectacular, and quite frankly, it was. Now, other things going up over at Coinbase are the operating expenses. Notice your technology and development, that doubled over the last year from 291 up to $609 million. They did keep a lid on that sales and marketing from 195 down to about 140 on that. Your G&A side, that did not decline. It went from 248 million up to $470 million. So your total operating expenses, despite the drop of 63% year over year on that revenue side, look what happened to your operating expenses. They actually went up. They went from 1.35 billion all the way up to nearly $1.9 billion. So again, despite a 60% drop in revenue, your operating expenses actually increased. That is going to create a disastrous scenario on these financials, where your operating income last year was positive $874 million, which is just spectacular. If this company was still putting up these types of financial, this stock would actually be going probably in the other direction. But unfortunately, that's not what's happened. Operating income goes from a positive $874 million to a negative $1 billion. That is the primary reason why this stock goes down. If crypto went down and this company could still figure out a way to monetize that and make money, the stock would actually be performing very well. But the fact is, when crypto gets crushed, this stock will get crushed probably even to a greater degree. Pull down to net income, paints a terrible story. Look over the last 6 months. It really shows you this quarter was a disaster. And so sure, I think one of the bull case arguments, if you're holding Coinbase stock, I tell you what, if you're holding this stock over $220, maybe even over $180 per share, I don't know if you'll ever see this type of valuation for Coinbase ever again. It might reach this stock price because of reverse splits and dilution, but from a valuation perspective, I don't think this stock will reach those highs. Look, it still's got a $19 billion valuation. For this stock to double, triple, quadruple, get back to these valuation levels just seems unheard of at the current time. And so one thing you could argue is that this quarter, particularly bad from a crypto perspective, could be the worst that Coinbase puts up. I don't necessarily believe that, but you could if you're an investor. Now, you notice over the last 3 months, our operating loss was $1 billion. For the last 6 months, it's $1.6 billion. So those losses accelerated because there were about a $600 million loss all in the first quarter, and now we've accelerated that to $1 billion. So for the last 6 months, you've lost over $1.6 billion on that operating side. Last year, it was about $1.8 billion. When you come down to cash flows, it does not paint a better story. Part of that story is with these stock-based compensation over at Coinbase, the fact that last year you had $189 million worth of stock-based compensation expense on this $1.3 billion worth of operating expenses. Notice in the most recent quarter, despite the fact that this stock has slid 68%, in fact, it has a lot to do with the fact that this stock has slid so much that Coinbase has to give even more of the stock out in order to compensate its employees. So off of this $1.8 billion worth of operating expenses, over $391 million is actually Coinbase stock. That's also going to create a heavy pressure to the downside on a stock like this. Now, you pull down a disastrous net income number of $1.5 billion. We were loving this company when it was putting up over $2.3 billion worth of positive net income last year. On a 6-month basis, we noted that the stock-based compensation expense went from $293 last year all the way up to $743 million for the first 6 months. I'll remind you, folks, we've got a $19 billion company, and this company's on pace for the next 12 months to give out about $1.5 billion worth of the stock. That is heavy, massive dilution. You have to keep that in mind if you're Joe's shareholder. Look, if you're an executive at Coinbase, if you're a developer, if you're getting this stock-based compensation, it's great for you. Folks, this is not the employees of Coinbase channel. You don't get this luxury. You don't get to put in your time and get Coinbase shares. You have to put in your time, earn money, and then trade that for Coinbase share. That's why we pay so close attention to this number, because this negatively impacts you as much as anything when it comes to the stock market. Dilution is not, I repeat, not your friend. Now, you come down here to net cash used in those operating activities, a negative $3.8 billion. Last year, you're sitting at a positive $7.4 billion. My guess is off $2.3 billion worth of net income, $7.4 billion worth of net cash. There's some funky stuff in this cash flow statement to where I wouldn't even value Coinbase based off their cash flows. I would focus very much on these operating losses, see if they're able to turn this around with very difficult quarters. Again, I showed you at the top of the show, look into infinity, essentially. Wall Street's not expecting much more revenue to come in the board over at Coinbase. We're talking maybe an extra 200, maybe on the high end, an extra $300 million on top of this $800 million. So they're really going to have to do something with these operating expenses, which are nearly, actually well over $1 billion more than just your total revenue in a given quarter. This company needs to generate nearly $2 billion to show any kind of profit, and I don't see any projections of that anytime soon from Wall Street. Getting back to cash flows, there are, again, the things we pay attention to is the stock-based compensation expenses. They burn through more cash on the investing side, combining businesses, combining assets. Now, on the financing side, they weren't able to do a whole lot. When your stock is down this much, you can't do equity fundraising. Essentially, Coinbase going to a big investment bank or a big investor and selling them a larger chunk of the company. Look, this is just, nobody's going to do it. So it makes it difficult to raise that money. That's why why in the most recent quarter, that's why over the last 6 months, this company has burned through over $4.66 billion worth of cash. This is cash actually leaving the building over at Coinbase. And when we come over here and look at it from a cash perspective, if that burn rate maintains itself, this company has about 6 months of cash left. I don't necessarily think it's that dire of a situation over at Coinbase, but if they're not able to reaccelerate these revenues, I would assume well over the $2 billion mark, this company is going to have to figure out a way to raise cash with the stock down over 68% and the crypto market still seeming like they're on thin ice. From a liability perspective, you do have some long-term debt. I guess they could go down that route again, but boy, this is a speculative investment. If this company is not able to reaccelerate revenues, they either need to reaccelerate revenues or they need to drastically, talking about slashing operating expenses. They'd have to do it in the technology and development, which means competitors would maybe get out in front of Coinbase, and they need to try to slash general and administrative as well. The private jets, the fancy parties, all of that stuff needs to go away. If you cut R&D and general administratives in half, that's about $500 million. That would still put you in a company losing money on a quarterly basis. From an operating perspective, this company has to be able to reaccelerate its revenues. Otherwise, the $19 billion market cap and quite frankly, the $83 price tag on the shares is going to go much, much, much lower. From a technical perspective, we are clearly, obviously, I don't need to tell anybody this, you're in a massive downtrend from the longer term, basically from the birth of this company in the intermediate term. Now, of course, in the shorter term, we're seeing this with a lot of stocks. You have made a little bit of a sideways move, and then many of them have also rallied in the last couple of months. We saw that with Coinbase over the last month, this stock has actually been doing quite well, up 57%. So there is and are opportunities to play the pops and drops on this one. To me, I think the trade right now is to play this one getting rejected at this area, which is, it appears where it's going to get rejected, which is simply just a continuation of lower highs that we've been making all of this year on this stock. I think you retest the lows or near the lows on this stock back down at $55 and $60 per share. I think you retest this area of consolidation if you break right through it, which I think when we look at these financials and if crypto remains on thin ice, sure, if crypto reverses and all of a sudden goes to the moon, this stock is probably going to go on a ride right along with it. But let's assume at the very best, crypto trades sideways, and at the very worst, crypto has another leg down, like under 20,000, under 15,000. Well, this stock's got a long ways to go. We're probably talking under 40, maybe even $20 per share, because when you have a $19 billion market cap and Wall Street is not projecting your revenues to grow outside of a $200 million range for the foreseeable future, and on top of that, you've got operating expenses exceeding your revenue by over $1 billion. This company's in massive, we're talking about massive trouble from a financial perspective, but from a technical perspective, you could make a lot of money. Make sure you have your stop losses. Make sure you have your disciplined investor hat on when you play with stuff like this. This is as volatile and as speculative as a crypto asset, and some people might even argue it's even more speculative than the crypto assets like Bitcoin themselves. Hopefully, you guys enjoyed today's video. Back again soon with more. Good luck with your investments.